Good morning, everyone. This is Travis from Carter Cow Capital, helping you fight for your financial freedom through the Forex market. This is another episode 281 of Trade with Travis. Thanks for being able to watch us on TradingView on YouTube, and obviously being able to make sure that you end up subscribing to Expert Advisor Reviews on YouTube as well, as we go through and take a look at what's happening with the market. And being able to see what's going on. Let's go ahead and go through the disclaimer real quick, and then after that, we'll get started. I'm not a CTA, so I'm not going to tell you whether to buy or to sell. What I'm going to do is teach you education, and from that education, you can be able to make your own informed decision. And understand that trading involves risk. It involves risk of being able to make money, also involves risk of being able to lose money, so please keep that in mind. And understand that past performance is not indicative of future results, which means that if you end up making money yesterday, it's not promised that you're going to end up making money today. Um, What's going on with you? Hope everything's going well. Hope everybody's doing very well today as we go through in the morning. Please type in inside of the chat box if you end up having a green day or a red day yesterday when it came down to trading. Obviously, green day means that you made money. Red day means that you end up losing money. Or just type in stay away if you did not take any trades throughout the overall day as we go through this. Um, Kind of lets me know the temperature of what we're looking at today with everyone as we put everything else down. And we'll go from there. CMJ, what's going on with your big dog? Hope everything's going well. Hopefully you enjoying your time out. I have some good news for everybody, especially for the people that have been with me for a while. Actually, end up finally getting to my developer. Finally, end up getting back to me about the boss band package and being able to actually fix the AI in that, and I finally ended up getting that back. So I'm actually happy about that. That gave me a chance to be able to take a look at it today and see what's going on with that. Uh, I'm good. I'm good. Block, what's going on with you, big dog? Hope everything's going well. All right, so let's go ahead and get started. Today is Wednesday. We ended up having some pretty big stuff that ended up happening on Tuesday, but yesterday was kind of flat. We ended up having CPIs from the pound. It was expected to be 9.8, actually ended up being 10.1, so it's a pretty good thing for the pounds. Other than that, we ended up having exports come out or CPI come out for the New Zealand dollar, and exports come out for Japan. Not much when it came down to that news. So um, it still feels pretty flat in a market that's starting to consolidate. And typically, April typically consolidates a little bit. So not necessarily the worst thing in the world. Just means that we're looking for a big breakout going into the summer months. Um, Today, what we're going to end up having, or what we already had, was interest rate decisions from China. We're going to end up having Governor Macklem end up speaking a little bit later on today, and then the rest of it's just going to end up being more for traders and being able to take a look at the chart. So today's Traders Day means that the chart is going to end up being way more important than what's happening with the overall news. I'm going to start off with the United States dollar index, and after that we'll go oils, and after that we'll go gold. If there's a pair that you want me to be able to take a look at, please place it inside of the chat box. We'll talk about that as well as we end up going through everything. So from a weekly perspective, kind of going back to this old chart that we end up having, the trend is still considered to be bullish, but yesterday was a little bit more of a bearish day. The market is getting closer to support or falling and holding that support on this purple trend line. This purple trend line has been showing that the market has been bullish since the early portions of 2021. So as long as the market stays above this purple line, then that means that, to me, long term, that the market is going to end up being bullish. We take a look at it from a daily perspective. The market is showing signs of being inside of consolidation, where the natural support is right around the low of 12,750. And we have not pushed back up to that high, at least yet, but the resistance high from that move was at 12,985. So as long as the market kind of stays here in consolidation, there's going to be a move that's going to end up happening at some point in time. The question is, um, is it going to end up being in the upward direction? So we go to 2 hour, we can see that obviously um, this is our largest scale consolidation. The market ended up breaking the counter trend line, break to the upside, retesting it, and then after that, did not make a move. The momentum did not push it up to the upside. So to me, I'm expecting that the market may fall today. And then after that, kind of retest the bottom of this consolidation, possibly retest the bottom of this overall trend line before being able to make a move to the upside in this case. And so if I'm being able to say, hey, if I wanted to be able to make a move on the United States dollar pairs as of yet, it's kind of like what I said yesterday. Until this market ends up making a defined move in one direction, unless you have a grid trading system, there's no reason to trade United States dollar pairs. Okay, typing a while, yes, if that makes sense. I'm not interested in being able to take a look at U.S. dollar pairs as a pair for it's being able to trade today. U.S. oil U.S. oil ended up doing what we thought. This market has been in consolidation since early November of 2022. The resistance high is at 82.50. The support is at $70 a barrel. A couple of days ago, the market ended up pushing up to that 82.50, finally getting up there from the $64 a barrel that it was. Rejected off of 82.50. I said that if you was interested in being able to make a trade off of this one, this would be more of a strategy for, meaning that you're basically buying support up to resistance or selling resistance down to support. And remember, because the market has touched this overall resistance level more than three times at this point, your take profit level would be at this halfway point or that box that we end up showing when it came down to that. And essentially, what has happened is that the market has rejected down to the midpoint. So if you end up taking a trade off of that one, congratulations. I personally did not take that trade, but we ended up talking about the position of where you could be able to get out. Would it be from the resistance all the way down to at least the halfway point? That would be an easier trade to be able to take. Okay, so oil's in the middle of consolidation. This is a 33% chance of being able to to be able to win off of this one at this point. So if you did not take that trade, I would not look at being able to jump in. Not yet. So oil consolidation, which means that U.S. Which means that the United States dollar is in consolidation and the Canadian dollar is in consolidation. There's no reason to look at United States Canadian dollar as a actual viable pair to be able to trade either. Um, Hopefully, everybody kind of understands my logic on how I end up getting to that point. We're going to do the same when it comes down to what's happening with gold, because gold has a strong correlation with the Japanese yen and the Australian dollar. Um, so here we go. Taking a look at gold. Gold is in its own consolidation. It's a wider range of consolidation, but the support was down at 17 or 1692. Let's say 1700. The resistance is at 2070. The market ended up getting up to 2050 on this last push. We are in the third phase of a Fibonacci swing to the upside, where the D extension would be 2100, 2133. Currently, right now, the market is in a R3 or in a push zone phase where this market could continue to keep on pushing up to the upside. Uh, FET when going over crypto, cool. I'll take a look at it. We'll take a look at Bitcoin next anyway. Um, when the market ended up going through this triangle, broke up to the upside, we had a breakout, we had a retest, and from there the market ended up going flat. To me, with the United States dollar showing weakness, I believe that gold is probably going to end up pushing up to the upside. So I'll take a look at a pair like CAD yen and look to be able to see if the connect and see if the Japanese yen is strong against that. I'll take a look at Australian yen, take a look and see if the Japanese yen is strong against that. If they are, then that tells me that more than likely that we probably may end up seeing that this market may end up starting to make a pop up to the upside. So this is what I would look for in this case, because we see the market fell all the way down to 1970, found support, which was basically at the halfway point of this consolidation triangle right here. Yeah, basically fell at the halfway point, or basically fell at the support of what that triangle was, and then after that started to pop up. So um, I pay attention to a trend line break, and we have that trend line break right now currently. Um, the 2 hours not necessarily in the greatest place when it comes down to stochastics, but at this point, I think it's more like beggars can't be choosers if you're going to look at being able to take a position on gold. Um, we know from a weekly standpoint that the market is somewhat bullish, but over the course of the last 2 weeks, it looks like momentum is kind of stalled. We got an indecision candlestick 2 weeks ago. Currently, right now, we got an indecision candlestick right now, and we had 4 weeks, a couple of weeks other consolidation until the market ended up breaking out of this area. So even though I believe that the market may end up pushing up to the upside, I don't think there's a larger momentum push that's going to end up allowing it to be able to get it done, or finish up a large push up to 2133 going into this week. But I do think that there will be somewhat of a push to be able to get out of this 2000 zone and keep on moving up. So let's talk about game plan on this one, because this may be the best chance that we may see on gold at this particular point for us being able to get in. Let me go back to the fibs and take a look at it one more time. We'll see where we're at. We are in the one, two, three, four, fifth phase of a 2 hour fib. The extension on the 2 hour fib is up to 2086. We are basically attacking what a B is right now. What a B was at 2000, basically at 2000. So market is cracking above 2000. The 2 hour the stochastic is basically in no trade zone, but I'm not going to end up paying attention to that anymore. Stop loss, if I'm going to end up making any move off of this one, will end up being below this swing low right here. Let's say 1945 will end up being the stop loss. It'll be 15 points. If we're going to go after anything, I want to go after the resistance first. The resistance would be these highs that we end up having from that position. So 2070 will probably end up being the first move. We go back and take a look at the previous consolidation off of from before the first time it made its move back up here. That resistance was 2074. So take profit on this one. First take profit on this one would be 2070. So we're talking about 70 points going 70 points with a 15-point stop loss. So talking about a 1-to-4 risk reward. I like that overall thought process on being able to make a move off of that. And to be honest, I would be interested in. It wouldn't be a 5% trade. It wouldn't even be a 3% trade. I'll probably go 1% off of this one to be able to take a move off of that. Here we go. Entry will be right here. Stop loss will be right there. Take profit on this one would be up here. Reward from here would be 667 points compared to 566. That's a 1-to-1. I don't like that. Hold on. Why does it look like it's smaller? Let's bring the stop loss a little bit tighter then. Let's go stop loss 1960. 1960. Okay. Okay. That's my plan right there. I'm going to look at being able to take this buy off of gold. Once again, a 1-to-1 trade. Entry will be now. Take profit will be at 2070 for the first take profit. Stop loss will be 1960. Second take profit will end up being 2086. Third take profit will be 2133. If people are looking at being able to take it from a longer range off of that one, but um, that will be a active trade that I'm going to end up taking currently right now. I'm going to pull this up on another chart and look at being able to take the trade now as we go through. Okay. Any questions on that one? Any question on gold? Can we move forward? Okay, cool. Let's go ahead and go to Bitcoin real quick. Last time we took a look at Bitcoin, I'm just going to be very quick about this one. Um, we end up I was interested in being able to take the trade from 25,000 all the way up to 29. It broke above 29, got all the way up to 30,000, rejected, broke out, retested on this 29,000 number, and then after that, currently right now the market is actually rejecting. I don't think that this market will keep on falling down. I think that um, it will find a point and it will start looking at being able to push up to the upside. If I'm going based off of this, I have my trend line out looking for a buy when the market actually starts to be able to make a U-turn off of this move. Um, that's me personally. Um, and think about this. The reason why I'm saying that is because the United States dollar across the board is showing that it's weak or showing signs that it's going to end up being weak. So I expect that the market could um, look like it could be able to push back up. Block ends up saying Bitcoin looks like it's gonna trend sideways from 32 to 25 for a while. Well, it makes sense, but um, that would kind of dispel half of the movement that's done happen historically. Because remember, the reason why I said that 25 to 29,000 area was going to end up being the best trade was because this has been a no unfair market price area, been basically a trend area. Market exploded in this area when in early April of last year when the market rejected the first time, and then after that had no hesitation to be able to push back up from here. So if it's going to consolidate, block is going to consolidate above 30,000. I don't think it will consolidate back inside of that 25 to 29,000 range. I think that this may be the last push up before actually being able to stay out of the 20s for a while. If I'm being honest, when it makes that move. I'm not saying that it's going to happen today, but when it makes that move, I think it's going to remain to be above 29,000 and stay up from there. And then after that, you'll start seeing all of the people that did not make the move will start looking at being able to jump into the move from there. Um, so that's what I think that's going to end up happening with that move, if we're being honest. Um, I don't need to look at it anymore with Bitcoin. I mean, just going back to what we ended up talking about for the last couple of days. Um, let's see. You had FET. I don't. Can I get FET off of this one? Okay, let's see. FET is an AI learning machine network for the blockchain that executes smart contracts. You know, I'm about to ask you, so thanks for clarifying that. Um, um, talk about where it could go first, and then after that we'll talk about inconsistent forex history, data file, data and logs. Okay, let's take a look at trading view. Let's see what trading view has for. I, s- I see the same thing. My thing is I'm just trying to figure out where price is going to go at this point. All right, um, here we go. Clearly, we can see from a daily perspective that this market is in consolidation. From an Ikimoku standpoint, price is in the middle of the clouds. Um, I can see the bullpen. That's a long term type of deal. So, trend line, trend line, trend line, trend line. Thank you. There goes your triangle right there, block. And just taking a look at it from a daily perspective, let's put this into sync this into the layout. Too little information. Too well. Okay, so going based off of the vortex strategy, obviously block, you know the vortex strategy. So I'm just talking about that in general. Um, because a high volume node, the market ends up falling. The market will end up falling down to 0.2859. So let's say 0.2860, or if at most 0.30. So your gap will end up being from here to here, but it's already done hit support in that area. So I expect that the market is going to end up basically kind of falling in between 0.30 and 0.41. As soon as it ends up breaking above 0.41, then we're talking about the market could at least reach back up to this high price up here. I would not look at being able to clear this price until 44, or I would say that you can still get in. You can still get in, but your best trade will be above 0.44 if you wanted to be safe going after this overall range right here. Um, but obviously, if you're looking at this from a long-term support angle, I would like to be able to see that the market may fall down to right around 33 again for its buys. So if you're interested in being able to trade this from a long-term buy, 0.33, that 0.33 area will be the area where I would look at being able to buy. From a daily perspective, let's see where it could go. Um, Everything's going to be on this one. I think everything's going to end up being kind of dependent on what's happening with um, obviously what happens with Bitcoin, and if the market's going to end up popping, because obviously altcoins pop after Bitcoin ends up making its move. But if I'm looking at being able to get back in, if we go based off consolidation, I would look at being able to get in at 33. Support, support, support. Let it fall down here. Look at the market falling down to support again. I would look at being able to make an entry right here with the expectation that this market may do this for a while, but eventually that we should see a pop, and then after that go from there. Second and third order would be once the market ends up breaking above this overall area, and then after that we should see that it should roll from there. Yes, yes. I would buy on this for long term. I don't look at any project when it comes down to um, cryptocurrency, especially altcoins on selling. I think it's a waste of time if you end up doing that. Now, I think some people made a lot of money off of it, but me personally, just the way and the nature that I trade, it'll be a waste of time for me. So my entry will be somewhere down there, it'll be right around 33 cents at the least. If it gets down to 28.50 again, then I'll be looking at being able to get from there. So 28.30, point 28, point 30 will be the areas where I'll look at being able to buy, and then after that, kind of going from there. Let's go US 30 real quick. Got time for to be able to talk about that one really quickly, and then after that we'll talk about Nas 100 when we get out of here. Oop, there we go. Uh, so remember, when you look at indexes, for people that are new that are watching this, if you end up looking at indexes, understand that the correlation that it has with the United States dollar. If the United States dollar is getting stronger, then that means that the indexes are typically going to end up getting weaker. The United States dollar is weak, then typically the indexes will end up getting stronger. Currently, right now, we're in the middle of consolidation. Now, if we look at this from a daily perspective with the Ichimoku cloud, with a resistance, uh, with the long-term resistance being above 37,370, and the support, at this case, kind of well, we got to figure out what a support is going to end up being naturally. Again, we may have to move this down a little bit from a long term perspective, because this long term support is actually at 31,450. Uh, do I like TradingView or Smart Trader more? Um, Good question. I like Smart. Uh, I like Smart Trader because of the Fibonacci function, and being able to know that once you know that a market is trending, that you can use the fibs to be able to figure out where the market is going. TradingView just doesn't have that. They don't have an automatic one. They just don't have a Fibonacci, kind of like what Smart Trader has. But TradingView has volume profile, and Smart Trader doesn't. It just doesn't. And they always have someone or a new developer always bringing in new indicators to be able to work with. So me personally, long term, I like TradingView. For me and the way that I've traded or the way that I started trading, I like Smart Trader for what it does when it comes down to that. All right, so last time we took a look at this trade, we ended up talking about the buy when the market ended up breaking out of this consolidation at 33,630. If you end up taking that trade a little bit earlier, then you would be in profit. Hopefully, you got out when the market ended up making a second tap at 3,400. Currently, right now, um, as we look at it, the market was inside of a channel, and then after that, it broke. We end up having a major fall from 33,849 all the way down to 33,715 earlier this morning. I think this is your breakout to the downside. We'll have a retest right here, but the question is, will we see another fall down at this point, staying below this overall move? So something like this: market failed, broke out, retest from the bottom, and then after that, falling down again. I don't know if we're going to get that, but either way, I'm not interested in being able to make this move yet on US 30. US 30 to me is a wash for today, so I'm not taking any trades off of that one. I'll let my automation systems trade this. Now it's 100, last one. Now it's 100 is still inside of consolidation where the breakout is at 13,180. I'll be interested in being able to buy from that position currently right now. As the market stays inside of consolidation, I'll not be interested in being able to make a move. Uh, the market is slightly going from one consolidation to another. So remember, when you have a block over a block, that typically means that the market is going to be bullish. So I would pay attention to see if this market falls down to support at 12,850 and holds support. If it holds that position, then I'll look at being able to do a strategy for. Once again, if you're not familiar with a strategy for, that means that essentially what we're doing is uh, buying that support. We're getting out at the same position where we think that we are, which would be up here. But now our stop loss is below the low of this actual range. So we can be able to put it at this halfway point, have a better risk for reward, go after a longer spot when it comes down to that movement. So if this market falls and it holds up at 12,845, then I'd be interested in being able to make the move. Uh, but essentially what I would be looking at is being able to get in off of this little area right here, or getting off of that support right there. And then hopefully the market will start to push up from that 12,845 area and then break out of this high volume node. Okay. So that's what I'm looking at and interested in being able to do. Currently, right now, that move has not been made yet. If you like what I end up doing, please make sure that you end up clicking on the boost button. If you don't know what I'm doing and you want to understand what I'm doing, please make sure that you end up clicking on the boost button. Then after that, send me a private message. I have a lot more time to be able to talk about everything now since we finally end up getting back this technology, and I start testing that out a little bit, and going out throughout the week. Like always, make sure that you end up planning your trade your plan. I'll see each and every one of y'all in the next video. I appreciate each and every one of y'all being able to pop in. Take it easy.